Hi, I'm Jonathan York, Bay Financial Partners, looking at investment markets. The meeting between Xi Jinping and President Trump is now finished. It's very difficult to see exactly what Trump gained from that meeting. Apparently, there's quite a few sort of concessions on trade between China and the US. In terms of China buying a lot more products and goods from the US. But as yet, there seems very little progress on the Iran situation. And now very interesting because Putin is now in China for a 3-day meeting. So it will be very interesting to see what comes out of that. Now as yet there seems no resolution in sight to the Iranian situation. Once again, Taco Trump struck at the 11th hour, ceasing potential further attack on Iran. Apparently at the request of the Iranian administration. Now again, what is quite interesting there is apparently it's not a war now between the US and Iran. The issue for that is that after 60 days, Trump has to get congressional approval. It's now well past the 60 days and he has yet to get any congressional approval and is unlikely to get that. So he's now saying it's not a war, despite referring to it as a war in many of his speeches. So once again, it looks like Trump trying to circumnavigate the rules and regulations. But once again, it's just a question of how Trump can try and extricate the US from the Iranian situation without admitting he was wrong to start the war in the first place. But again, Trump keeps coming out and saying, look, they want to make a deal. They need to make a deal, otherwise they're going to start bombing. And then all of a sudden it's, no, well, I don't like what they put forward. The first sentence I read, I don't like it, so I just throw it away. Which hardly seems constructive to sitting down and getting some sort of process in place to be able to get an end and a resolution to the conflict. And it's really just a question of how Trump has can remove the US from the situation without admitting he was wrong and trying to save face. And once again, there have been question marks over the Trump trust that is supposedly managed by his children and some of the transactions. Now, Kevin Warsh has now been confirmed as the new Fed chair, but he's going to find it pretty tough time to be able to bring interest rates down. You've got the latest PPI data coming out, that showed a year-on-year rise to 6%. And with Trump already stating that once Kevin Warsh is appointed, he expects him to bring down interest rates, like I say, it's going to be very difficult for the Fed to bring rates down under the current environment. Indeed, term rates seem to be moving higher and higher. You've got the 30-year above 5% now at 5.19, the 10-year at 4.66, and the 2-year at 4.12. Now, with the Fed funds target rate of 3.5 to 3.75, clearly the market doesn't anticipate any Fed cut in the near future. But also it does pose a real problem as well for Trump and the administration, because with those rising rates, the US's interest rate payments are getting more and more. And given the size of the US debt, that is a serious issue. Now, in terms of earnings, they've been going pretty well so far, but a big week with Nvidia releasing its earnings this week. Now, with the lack of any progress on the Iranian situation and the Straits of Hormuz, in terms of getting that oil through the shipping channels, oil is up again. Currently around $108 and change on WTI. That's up around 75% since the war started. And is really having a major impact on the global economy. Now in the UK, like the rest of the world, bond rates are rising, and that's not really helping the Bank of England or the sort of confidence in the government after those local elections. Now in the EU, as we head into the summer months, it's really going to be pretty interesting to see what impact the higher oil prices and more importantly jet fuel is going to have on the European summer. Because many airlines are starting to sort of curtail some of their flights and cancel them because just not economical. And that could have a major impact on the EU economy. Now in Australia, it's just a question of how many more hikes the Reserve Bank is going to deliver after the recent hike taking the cash rate to 4.35, and that was an 8-1 vote. So clearly they are concerned about inflation. But then the Australian economy is doing sort of pretty well, really. Certainly resources and minerals are doing pretty well, with copper reaching recent highs. Now here in New Zealand, sort of all political parties are really getting geared up now for the election. Certainly quite a bit of talk about New Zealand Super and whether it should be changed or not. The big issue is that you've got a shrinking work pool and you've got an increasing superannuitants pool. So, really you've got less money coming in and more money going out, which is basic 101 economics that is unsustainable. So something has to change. So do you look to increase the age of entitlement for superannuation above 65? Or does it become means tested? The other, what else has been mentioned is buying back the BNZ from the Australian NAB. But again, that won't be cheap. It'll be a pretty high price. And again, where's the money coming from? As we will see next week in the budget, it's pretty tight out there and there's not a lot of spare cash. But on slightly better news, the latest dairy auctions are up again. That's the second week running now. And, again, that's pretty encouraging out there for the New Zealand dairy sector. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I'm looking forward to speaking to you soon.